Now we move forward to the fourth panel discussion, the future of payments, navigating automation, resilience and innovation. The discussion will focus on leveraging AI and advanced technologies to build secure, real-time and future-ready payment infrastructure. May I invite on stage the panel of speakers for the session, Mr. Prabhu Kumar, Founder and CEO, Vegofund Digital Solutions, Mr. Abhishek Oja, Chief Enterprise Architect, SVP and Head of Enterprise Architecture, Ujjivan Small Finance Bank, Mr. Chakrabarti P, General Manager and CDAO, Canara Bank, Mr. Pradeep Srivastava, Chief Technology Officer, Bank of Maharashtra, Ms. Sunita Handa, Principal Advisor, Strategy, Protect.ai, Dr. Anuradha Bhatia, Head of Technology, India, Standard Chartered Bank, and our moderator for this session, Ms. Anushi Shah, Associate Partner, McKinsey & Company. Welcome everyone. Over to you, ma'am.
Good afternoon, everyone. Thank you first to all our panelists for making the time for an interesting conversation on the future of payments. In the age of AI, we've had a series of conversations on AI. I think payments for India, we have been the leaders in both innovation, not just the scale at which we've been doing it, but also the speed. So today, I think we want to spend time with all our leaders over here discussing what are some of the next opportunities within the payment space and how they are thinking about the use of AI within that. I think if we look at just the overall volume growth that we've seen in payments, one of the biggest challenges that all institutions today are facing are around the margin pressure and really how to think about where do, at the cusp of this volume expansion, drive value for banking institutions within the payment space, and how to really think about what are the avenues where the next wave of disruption will come, particularly with the focus of driving value to the banking institution. So maybe we start with that. Ma'am Sunita, if you could kick us off on this question on how do you really think about driving value for the institution, for payments, especially given the pressure on margins.
Good afternoon, everyone, and thank you, Anushi, for a very insightful question, I'll say. In fact, it's 3 in 1. So let's address it part by part. See, with 21 billion, that's right, 21 billion, over 21 billion UPI transactions a month, India is definitely the global leader in real-time payments, no doubt about it. And since most of these payments, they are free for consumers and for merchants, banks are really under pressure and they are hardly making any direct money, I'll say any money directly from these payments. So that is the issue. So in this phase of payments evolution, we will see a shift from or a conversion from value or volume driven growth to the value conversion. Yeah. So there has to be a system. Now we are talking about there is volume growth and then how the value will be created. And this value creation will come from either by harnessing the data or through all the partnerships that are going on in the ecosystem, or through new products that will be launched, the embedded products. So all these things have to, bankers have to pay attention to these things now, instead of saying that okay, we are not getting any commission on each payment that we process. So that's not going to happen in this phase. In fact, many of the payment system players, they have already started harnessing this data, the payments data and insights for say credit scoring or say inventory financing, and other examples are customer stickiness through integration of these payments with their other products, say insurance or commerce, etc. And another level is that when bankers, they have their systems integrated with or collaborated with fintechs and government systems, then what happens that your outreach increases, your deposits grow, and then your cost of innovation also comes down. So then Anushi, you asked about what should be the strategic imperatives for the bank.
Yes.
I think the most important thing for the bankers is the mind shift. Bankers have to now stop treating payments as only a utility, but treat them as a hub of customer engagement. So that is one thing. Secondly, those silos of traditional banking, they have to, bankers have to move beyond that and go towards the product which is integrated, which is holistic, and which talks about the whole gamut of services bank can provide and how they can earn revenue through those things. And the last part of your question was what within this next 5-7 years, what are the things, what aspects will see a disruption. So, my one line answer will be that traditional card based payments, then SWIFT based banking and correspondent based banking, or even the POS terminals. These three will be disrupted in the coming 5-7 years, and they will go in favor of instant payments and settlements. I hope I have answered all points.
Yeah, I think it's also helpful to get perspective from the panel, but I think very, very helpful and very, I guess, well identified sort of pockets of opportunity for everyone here. Mr. Prabhu, as you think about it, right, given you're now away from the core banking space, as you think about it, what are the 3 decisions which you would tell a banker to sort of think about as they look at disrupting the payment space? And like Ms. Sunita pointed out, there are opportunities in the traditional card-based payments and others. What could be some of the areas, according to you, which are ripe for disruption?
Sure, Anishi. I think already my co-panelist has touched upon the point of value, because now we've already done about volume. For example, if I have to tell you, India has already seen that volume game. UPI has already demonstrated what scale, what speed and what inclusion can do, that we have understood. Now we are masters of that. Now to move away from the technicalities and to just get back to the basics, I think it's more about value creation. I think that's where we have to rethink. And if I have to just add a point, speed and direction has to go together. Now the speed is there, I do agree there is a direction as well, but I think we need to think about redirection. The reason being, here we are talking about banks are, yes, they are pressured for margin, because this real-time payment rails have already given the kind of a commoditization what it has to be done, because that's what is going to happen at a point. But now we are looking at value addition. As you said, like, yes, what we practice and what we preach has to go hand in hand. A couple of points what I could mention here to the bankers, and the request to all the fellow bankers would be, we need to think how we can add value. That value can come as an intrinsic value on the fundamental value which already the ecosystem is providing, and how that value can be further leveraged, and how the stakeholders of the ecosystem can leverage that value. That can be in a form of embedded finance, that can be, for example, just to, in the interest of larger audience, in the morning we launched a white paper which is exactly on the same thing, connected banking in India, in partnership with PwC, where we are speaking how India could look, or how banks and fintechs together can come together and look how they can collaborate and create value on the existing ecosystem. Second part, how we are going to unlearn and learn few things. See, now we have done a lot of learnings, we have understood how we have to scale up, but we also have to unlearn couple of things. For example, I would just like to quote, in the previous discussion, a panelist spoke about monolithic architecture. Not to point out any bank, yes, but at one phase we have moved ahead from a fintech point of view or a ecosystem point of view, but banks at certain point in time, they need to also come out of that monolithic architecture. System should be able to integrate well, adaptability should come up quickly. Then what happens, this value chain gets more quick, and we can actually see the value coming out of this ecosystem. And as if I have to add, coexisting and co-creating would be the model which I think we should look forward.
You already paved the way for the next question that I had for Mr. Chakravarti, as we talked about how value creation is shifting. I think we think about, are banks really set up from a technology perspective to be, to enable this entire string of value creation, right? And if we talk about it, and we spoke about again monolithic architecture, how do you really think about resilience, observability, SRE, and enabling all of that at this volume, that surge that the institutions have seen? And what are some of the challenges and learnings that you have, which you would like to share with our audience over here?
Yeah, absolutely, Anishi. So I look at the perspective in the lens of the commercial banks. So the traditional core systems which is there, which a bank is using it for various innovative use cases, it is resilient now. I can say in the entire banking industry, that is a stable system now, and it's a very, very reliable system because it's a core system as far as the banking is concerned, and regulatory is concerned about the core system, how we have authentic information, because it is a system of information for the customers. It's very, very relevant, very, very meaningful for the bank's point of view, customer point of view, and regulatory point of view. So now we are moving away from how the innovation can be embedded on seamlessly, very safely into these core systems. That is how the AI use cases are coming into the pictures. So to the major extent, I can say the banks are able to successfully, we could be able to navigate into the innovation space with a legacy system, because the core, outside the core systems, the innovations are built so that the customer's experience is not lost, and the stable core systems available for 24/7, the high availability is also ensured. With related to your questions of how the observability and how the resilience is built, I think this is not I am not considering that as a technological tools. I consider as a governance tools for any bank, and this tool actually plays a very, very vital role, because we could be able to anticipate what is going to be a disturbance for the customer's life cycle, his journey, what it's going to be become a impact for him for his successful transaction. So that is obviously required. That is going forward. I feel that it will be one of the mandatory, which the regulatory may enforce as a prudential safeguard for the bank, that you should have a good governance tool. So coming to the third point of you are asking for our learnings from the bank and what we have attempted as a part of the innovations here. There are a lot of innovations are happening around. We could able to get the benefit out of it, even though with adoption phase may be slow. See here, banks to bring the system of trust, that is more important than the speed at which innovation we are doing. So, but there are values are getting generated. There are really good values are getting generated, and it is being acknowledged. That is how we could be able to participate in the business, customer experience, and we also for compliance. That is how we were able to bring the value from this innovation. So that is how I look at.
Yeah, no, I think very helpful. The points that you talk about, modularity of the systems as well as the aspects about governance. Mr. Pradeep, coming to you, I think helpful to understand your point of view and really thinking about this from a forward-looking perspective. Are there certain failures that banks are underestimating today? Where are some of the investments that need to go? And as you think about payments and the scale, what are some of the areas where investments need to happen? Are there certain failures which we are underestimating in today's age?
So, yeah, good afternoon to all of you, and thank you, Anishi. We talk about too much about the SRE, which is site reliability engineering, and that is a concept which started evolving in India. But of course, this is something which all the foreign bank and Western countries is already practicing about that one. So in terms of this failure, and in terms of this IT perspective, failure is a very bad name if any service or any system failures is there. So reliability is definitely one of the key factor for that one, and this reliability is basis upon the different factors and different paradigms which actually working on the background. So I just take probably one or two examples, and then probably we can better understand in terms of the failure and how we can mitigate this failure. So one of the things like our bread and butter is a core banking system which we are running on day in day out. in traditional Indian banking environment, it is on a monolithic architecture, where it's tightly coupled, all the modules and integrated systems are tightly coupled. Now, we need to come up with this monolithic to the microservice based architecture, and that initiative has already started. Say for example, API is the one of the tool which we have already fragmented. The another one is like the microservice based lot of things which we are doing. So, just considering the UPI, which Sunita madam has already talked about that one, in terms of the volume growth which we are having, we cannot sustain this into a monolithic architecture. So, that is something we need to shift from that monolithic to microservice based architecture, and that is we can limit the failure. So, rather than having the entire system failure, this is the one leg of my system which fails, and we can immediately look into that one and fix that issue, and we can go ahead with that one. So, in terms of the investment, whether they are our monolithic type of the investment, or this is the new investment which we are talking about, that one, everything at the end of the day depends on the IT system. And IT is not a support system. Now, IT is a business enabler. I always say we are the business enabler. We are not a support team over there. So, business enabler is which is enabling the business. So, whether any kind of the investment, whether it is my simple CASA kind of the stuff, whether this is my stock, whether it is my mutual fund or anything which is going to be failure, it is a big risk from the banking perspective. So, that is why this SRE has come into the picture, and we look to very seriously on that one.
I think very, very fair point. I have a fundamental question, and I think linked to the part that you spoke about uptime and resilience is, has the world now changed towards saying that we are no longer talking about system uptime as resilience, but it's more about intelligence and trust being there in the systems, right? And the kind of frauds that we are seeing, whether it's the UPI outages, whether it's the deep fake, across all of this, what are some of the investments that are needed today for banks to really think about when we think of the payment related frauds? And in the past, banks have heavily relied on rule based understanding of fraudulent behavior. What are some of the places where AI can enable differentiation in terms of assessing, evaluating, preventing payment frauds? Maybe we start with Madam Anuradha. I think it's helpful to get your perspective on this, and then.
Yeah, thank you for the question, and good afternoon and Happy New Year to everyone. I think as we talk about fraud, it's become very important for us to look into it, how we deal with our banking scenarios. I'll touch base on few of the points before going into how we are making investments. First of all, I think when you look at UPI, from the UPI journey that we had from the day it started to where we are today, to prevent the fraudulent transactions, they have enhanced so much that it even tells you where you're sending the money, whom you're sending the money, is the account right. But we as humans, sometimes we are in so much of hurry, I think we don't look at it and we just go ahead and make the transactions. Second important thing to know about is QR code is always to send money and not to receive money. But I think most of the frauds that are happening in today's world is we think QR code can also, you can receive money. I think banks are making a lot of investments, even our regulators are doing a lot on mule account, hunter mules that we have. So, a lot of investments are being made, but what we are focusing as a bank is, first is people and processes, rather than first switching just to AI, is to enable people for them to know where all the frauds can happen and what all they need to do when the frauds are happening. And another thing is building capabilities with AI. So, that can help us that if it is a fraudulent transaction, there is a flag which is raised. Even I think all the UPIs have this important note where it tells you where you are sending, whether it can be a fraudulent transaction or not. But I think we, in the hurry of the time, we just do it. Second important with reference to deep fake that I want to talk about. So deepfake is something which is becoming very common. I would like to highlight one of the very common investment scam that gets highlighted is your WhatsApp scam. I don't know how many of you have been notifying or noticing it. So just a very quick example that we do at Standard Chartered is if there is an issue that has happened, one of our senior members' account was taken, put on WhatsApp, and it was taken as please do investment. This is an investment ask from Standard Chartered Bank, and it was immediately notified to us, not from our bank, but from somebody said, oh, you are telling us to invest. So that is something, a deep fake, which is really coming up. So be very cautious about it. None of the banking industry is going to tell you on WhatsApp or giving you suggestions to invest money. So be very cautious, reach out. For WhatsApp, please reach out. It's a general information that we share usually with the cyber crime sellers. If there's a cyber fraud happened with you, do reach out to the your nearest police station. Do inform them, block your WhatsApp immediately so that no further frauds can happen. I know I have answered over and beyond something which was asked, but this is important. Thank you.
Thank you, I think very helpful. You did speak about people and processes. It would be good to hear, Sunita, from you on how to think about the data and intelligence part of it as well.
Anushi, you mentioned that resilience. Earlier people used to think, scaling up or say uptime is resilience, and now the cyber security has become, another aspect of resilience. So what to do? I'll say resilience is both. It's a dual focus requiring thing. One is payments are to be always on, always secure. So it is a dual focus, no compromise, they are equally important. So always on part, I think it has been already covered by my co-panelists. Let me focus on and dwell on payments have to be always secure. See, we all know that cyber frauds are becoming more and more rampant, more and more sophisticated and more organized. So we bankers, see I'm still a techno banker also, so I will say we bankers. So we still have to, we have to be up against all these new emerging trends. I will call them trends, the kind of frauds that have started happening. So basically if I categorize them, there are 4 kinds of attack trends which are being seen. See, one is the mule accounts, proliferation of mule accounts, and the solution here is that KYC. Strengthen KYC, if bankers do that, I think mule accounts, they will automatically come down unless some people, they knowingly they go on commission basis and offer their account as a mule account. This is one. Second is mobile based frauds. See, India's digital story, at the center of it is mobile device and mobile apps. So the cyber crooks, they know it. So now they have started, last 5 years or so, they have started attacking the systems through mobile apps and mobile devices. So bankers have to, whenever, everybody for any small thing, you offer a mobile app to your user, whether it's an internal user or a customer. So is your mobile app secure? Please see it. And then is it inviting trouble that the cyber attacker is entering through the mobile app and then going to steal your data or do any kind of financial frauds. So there your risk, your real time and your runtime application system has to be there at the top of your mobile app. Third aspect is again very disturbing that the cyber crooks, they have started using the new generation systems. It is 5G, it is AI, it is ML for taking their frauds to the next level. So there again my solution, I am mentioning the problem and what is my suggestion. So then it has to be AI versus AI. If the frauds are AI based, you have to be up or against them and AI plus. So all these measures, and there you mentioned that that rule based fraud prevention engine or fraud management. Now the days are gone. In the present scenario, that only that rule based this fraud prevention engines, they will not work. you have to be proactive. They are reactive in nature. Once the fraud has happened, banker will come to know, they will say, oh, one fraud has happened, now avoid please second transaction, third transaction, or tomorrow it should not happen again, those kind of things. But no, now we have to go to biometric and more AI enabled fraud prevention measures. And fourth, which is very serious again, and the recent one, that even the AI models which bankers have started implementing, they are prone to cyber attacks. I mean, I do not know how many of you have heard about it. We have come across cases where AI enabled chatbots have been broken into by the cyber crooks, and they have asked questions and promptings they have given in such a way that that chatbot will reveal more than it is required to reveal, because the questions have been so intricate which the bank had not anticipated. So, then here also you have to, if you are implementing an AI model, please be aware whether it is agentic or non-agentic or something, you have to secure it first and then only present it to the public. So, these four things if you take care, I think probably bankers will be one up on the fraudsters.
So, I think these are very, very helpful and important areas that you have covered. I'll move on from our domestic rails to the cross-border and maybe move to Mr. Abhishek to really talk about what are some of the complexities that you've seen in the cross-border space. And again, this is an area which we all know is ripe for disruption. What are some of the opportunities that you are seeing here?
Yeah, sure, Anushi. So, in fact, I'll give my personal example. In 2017, I was working outside of India. I was working outside of India, and I had to come to India because my mother, she was not keeping well. She was in hospital, and my Indian account, because of some technical reason, NRI, NRO account, that was frozen. I was in need of money, and already my insurance amount was exhausted. So, and I had sufficient amount in my foreign account, and then I transferred. But at that point of time, in fact now also, not all the scenario, but now also it's like sending a parcel without tracking. You have transferred, but you don't know that where it is stuck. Thanks to one of my friend, actually he came forward and helped me in that situation, and then when I got money after some 4-5 days, then I paid back. But in this current scenario where we live in a real time experience, where users, they simply scan the money and then they want that to be in the real time. This 3-4 days is not acceptable, and that is when the technologies play a major role. So, technologies like API, then the cloud, and then the artificial intelligence plays a major role. APIs, like when we are transferring money, then there are multiple parties are involved, there are multiple systems are involved, and those systems may be disparate systems. So, how they can be interoperable easily, real time transaction, getting the status quickly, then routing based on certain logic of that specific country. All these can be achievable using the APIs. Now comes on the cloud. Thanks to the regulatory body that they have started accepting about the cloud. So, when we want to accept the scalability part, or when we want to have active sort of thing, the cloud plays a major role. And in fact, wherever there is a festive season, or when there is a surge in demand, then easily it is very much possible in the cloud. AI plays a game changer here, because AI not only detects the fraud, but if there is any AML sort of activity, they flag any red alert sort of thing. Then in case of if there is any data error, that identifies. So, with the help of these technologies, the payment overseas becomes very easier, and in fact, we have already started working toward that. We all might be knowing that UPI and the pay now, they have already done from India to Singapore, and it has already started happening. I am sure we will achieve with multiple countries very soon. So, with this I would like to.
I think Standard Chartered being one of the, I think, pioneers of some of the innovation on the cross-border side. It would be helpful to hear your thoughts on this, Anuradha ma'am.
Yeah, I think we've made a good development on the cross-border payment as being the only foreign bank for the foreign cross-border settlement. So I think as mentioned, you know, cross-borders have become very quick because we all need real-time settlement of any payment that we are sending across any of our relatives or to any of the banking partners. So I think API has been a very quick one, real-time trust lying on the systems that we have and the tracking mechanisms which are there. I think that's made it really resilient and also trustworthy for any cross-border payments to move ahead. I think that has been a real example that we work together at Standard Chartered.
And as we move forward, as we talk about cross-border payments, also want to ask this question, maybe we start with you on really how do you see this entire wave of tokenization, tokenized money and programmable money playing a role in payments in India and in the cross-border network? How do you see that evolving?
Sure, Anishi. Just to circle back before to that on the value, because you know now if you were talking about UPI, it was all about speed, and now tokenization, I think it's all about value now. I would like to see in that perspective. But before to that, I would like to circle back on something called as how we are very fortunate to have a very progressive, practical, pragmatic and you know positive regulator who has been pushing us, both banks and fintechs equally, to innovate, ensure like you know there is a equilibrium between innovation and the non-compromise one, which is a sacrosanct. See, value creation and risk are a double-edged sword. Otherwise, we have to go hand in hand. But here, as long as we are able to manage, mitigate, and think about proactive than reactive risk assessment, because if you see most of the models that currently we are using at by and large, whether by banks or fintechs, they are of reactive. So now we need to move from reactive to proactive. So that is where we are having an edge over the existing system, and we can really take care of the innovation. So that innovation really is going to help us. Now coming back to your point, which you're talking about how tokenization can look. So we have heard a lot about this, but yes, I would personally see it in such a way that it is going to really add value. Now there are innumerable use cases on this part, but we should always look from adding value, and from a long term perspective how we can collaborate with, it can be a fintech, or it can be a bank, or it can be a bank fintech. So this kind of a models we should explore, and I'm certainly sure that if you want to look at innovation and if you want to look at compliance in a different lens, that's not going to happen possible. So that might be one reason why we are seeing a bit of lag in most of the use cases coming to the real forefront. So if we are able to get that convergence, so probably we should be able to take this next to the next level.
Very helpful. I think given paucity of time, we'll take one closing statement from all of you. One thought on what is one foundational capability which you are thinking about in your organization as that is going to help you unlock the future wave of payments, and particularly in the context of AI, if there is something you want to cover.
I'll just begin. At WeGoFin, our approach has been very clear. Value creation cannot come at the cost of compliance and or the risk discipline. So we are putting compliance as a first paradigm, and then comes on everything, whether it's layered innovation or immediate innovation. I would say compliance first approach is the best way to balance and take it further.
Yeah, unified data lake instead of multiple sources plus governance layer.
Yeah.
I would say trusted, the governed and the reliable and real-time data, where the infrastructure for supporting the AI, agentic AI or generative AI initiatives. So the rest is all we have to plug the use cases on the top of it.
Absolutely.
I would say the which you talk about the system uptime, we already discussed about that one. So observability is a new concept which has come out. We should not be only looking one or two or three systems, like the payment initiator could be the some system, then it moves to the different channels, different switches, and finally it reaches to the core banking system. So it has to be a integrated monitoring from initiator to the final disbursement. So, end-to-end monitoring should be there, and observability is one of the future for the uptime perspective.
Yeah, my final line for the bankers fraternity, that please go for modern technologies that align you with the new ABCD of BFSI. A for artificial intelligence, B for blockchain, C for cyber security and cloud, and D for data harnessing. All the best.
ABCD.
Okay, a very simple one. AI is here to stay. It's not going to take away anything from you. Make sure that your data, your trust on the data is always there, and build solutions. First look at it whether they need AI, or build them as an automation and then move towards AI. All the best.
Thank you to all the panelists. Thank you so much for your valuable inputs. Thank you, everyone.
Yes. Thank you so much. A big thank you to our panelists and moderator for their valuable insights and engaging discussion. May I request our dignitaries to stay back on a stage for a group photo, please.